Michael Saylor. The 3 Bitcoin truths Wall Street doesn't want you to know. Wall Street thought he had lost his mind when Michael Saylor bet his entire company on Bitcoin. But what he discovered about money made that decision look conservative. I'm standing in MicroStrategy's Washington, D.C. headquarters, watching Saylor pull up a chart that Wall Street doesn't want you to see. His finger traces a line showing the dollar's death spiral, and suddenly everything about traditional finance starts to crack. They've been lying to us for 53 years, he says, his voice cutting through the silence like a blade. The numbers on his screen tell a story that most people will never hear, a story about the greatest wealth transfer in human history, and how you're on the wrong side of it. Saylor leans back in his chair, the afternoon light casting shadows across decades of Federal Reserve data spread across his desk. Behind him, Bitcoin's price chart pulses on a massive screen, but he's not watching it. He's watching the money supply, the debt clock, the velocity of currency collapse. In 2020, I had $500 million in cash sitting in our treasury, he recalls, his jaw tightening at the memory. I watched the Fed print $3 trillion in 3 months. That's when I realized we weren't experiencing monetary policy anymore. We were witnessing monetary suicide. The weight of that realization hangs in the air between us. He had built MicroStrategy over 3 decades, turning it into a billion-dollar software company. And now he was about to bet everything on a truth that Wall Street had spent years trying to suppress. But what's truly striking is what happened next. Saylor didn't panic. He didn't follow the conventional wisdom. Instead, he spent 100 days studying every currency collapse in history, reading thousands of pages of economic theory, modeling what happens when governments print themselves into oblivion. The Weimar Republic, Zimbabwe, Argentina, Venezuela, Turkey. The patterns were identical, unavoidable, mathematical. I ran the numbers assuming 15% annual inflation, he explains, pulling up a spreadsheet that would change everything. Do you know what happens to a dollar's purchasing power in just 5 years at that rate? He pauses, letting the question settle. The answer is devastating. A dollar becomes worth 50 cents. Your $100,000 becomes $50,000 in real terms. Your life savings cut in half, not because you made bad decisions, but because you trusted the system. This is exactly where the picture changed for Saylor's entire strategy. Truth number 1 hits like a freight train, and it's the truth that Wall Street fights hardest to keep hidden. The dollar isn't money anymore, Saylor states, his voice dropping to barely above a whisper. It's a melting ice cube. Every day you hold it, you lose. Every month, it dies a little more. And the people who control it, they know exactly what they're doing. He shows me the chart that changed his life, M2 money supply since 1971, the year Nixon closed the gold window and turned the dollar into pure fiat currency. The line goes vertical. From $600 billion in 1971 to over $21 trillion today. That's a 3,500% increase. Your grandparents' dollar bought 35 times more than your dollar buys today. Wait a second, don't miss this crucial detail. Saylor discovered that inflation isn't some natural economic phenomenon. It's policy. It's intentional. When the government prints money, they're not creating wealth, he explains, his intensity building. They're stealing purchasing power from everyone who holds dollars and transferring it to themselves and their cronies. It's the largest theft in human history, and it's completely legal. The mathematics are brutal. Since 2000, the dollar has lost 87% of its purchasing power against real assets, against gold, against real estate, against Bitcoin. The middle class thinks they're saving money, but they're actually watching their future evaporate in slow motion. This is a Cantillon Effect that Saylor obsessed over, the mechanism by which new money flows to the powerful first and reaches ordinary people last, after all the purchasing power has been extracted. But there was one detail Saylor hadn't anticipated when he started his research. The phone rings suddenly, interrupting our conversation. Saylor's expression shifts as he glances at the caller ID. I need to take this, he says, stepping into an adjacent conference room. Through the glass wall, I watch him speaking intensely, his free hand gesturing at invisible charts in the air. When he returns 3 minutes later, his face carries a grim determination. That was our treasury team, he explains. Bitcoin just crossed another threshold. We're now up over $5 billion on our position. Most CEOs would celebrate. Saylor just nods, as if confirming a mathematical proof he already knew was correct. This brings us to truth number 2, and it's the one that makes traditional investors most uncomfortable. Bitcoin isn't a risk, Saylor declares, leaning forward with laser focus. Holding dollars is the risk. Every day you stay in cash, you're guaranteed to lose purchasing power. Bitcoin is a life raft. He pulls up MicroStrategy's Treasury Strategy presentation, the same one he showed his board in August 2020, when he proposed the unthinkable: convert the entire corporate treasury into Bitcoin. His board members thought he was insane. Financial advisors called it reckless. Competitors predicted bankruptcy. But Saylor had done something no one else had done. He had actually modeled what happens to a company that holds cash during hyperinflation versus a company that holds Bitcoin. You haven't seen Michael Saylor's most controversial calculation yet. I showed the board 2 scenarios, he recalls, pulling up the original presentation. Scenario A, we keep $500 million in cash. At 15% inflation, which is conservative given money printing rates, we lose 50% of our purchasing power in 5 years. Scenario B, we convert to Bitcoin. Even if Bitcoin only maintains its purchasing power against inflation, we break even. But if Bitcoin continues its historical trajectory as the hardest money ever created, we multiply our treasury. The board sat in stunned silence. This wasn't speculation. This was survival. The vote was unanimous. MicroStrategy will become the first public company to adopt a Bitcoin standard. Everything so far was just the beginning of what Saylor discovered about Bitcoin's true nature. Wall Street tells you Bitcoin is volatile, he says, standing up and walking the window overlooking the Federal Reserve building in the distance. The irony isn't lost on either of us, but they're measuring volatility in dollars. That's like measuring the stability of your house while standing on a sinking ship. He turns back, his eyes intense. Bitcoin isn't volatile. The dollar is violent. It's destroying 15% to 20% of its value every year, and they're calling that 2% inflation. The real volatility is in fiat currency. Bitcoin is the constant. It's mathematically fixed at 21 million coins. No government can print more. No central bank can debase it. No politician can confiscate it if you control the private keys. The numbers support his thesis with devastating clarity. Since MicroStrategy began buying Bitcoin in August 2020, the company's average purchase price is around $30,000 per coin. Today, those coins have not only appreciated in dollar terms, but more importantly, they've gained purchasing power while the dollar has weakened catastrophically. In 2020, our $500 million bought about 70,000 Bitcoin, Saylor explains. Today, that same amount of dollars would buy maybe 10,000 Bitcoin. The dollar lost 85% of its value against Bitcoin. Every day we waited would have cost us billions in purchasing power. This is a Cantillon Effect weaponized for protection. By moving early, by positioning at the front of the monetary revolution, MicroStrategy captured wealth that late adopters will never access. Hard to believe, but Saylor predicts this is just the beginning of Bitcoin's ascent. We're still in the first inning, he states with absolute conviction. Maybe the second, when nation-states start competing to accumulate Bitcoin, when central banks finally admit they need it as a reserve asset, when pension funds and sovereign wealth funds finish their allocation, the price discovery will make today's numbers look quaint. He shows me adoption curves comparing Bitcoin to the internet in the 1990s, to mobile phones in the 2000s. Bitcoin's adoption rate is faster than both. El Salvador made it legal tender. Major corporations are adding it to balance sheets. The network effect is unstoppable, mathematical, inevitable. But what's truly striking is truth number 3, the one that makes traditional finance institutions most hostile. Bitcoin isn't just an asset, Saylor explains, his voice taking on an almost philosophical tone. It's the separation of money and state. It's the end of government ability to steal through inflation, and that terrifies them. He pulls up research showing over 100 countries actively developing central bank digital currencies, CBDCs. China has already launched its digital yuan. The European Union is close behind. The United States is studying implementation. When the current system collapses, Saylor continues, his intensity building, they're not going to admit failure. They're going to offer a solution, complete monetary control through CBDCs. The implications chill the room. With CBDCs, governments could freeze your account with a keystroke, expire your money if you don't spend it fast enough, program your currency to prevent certain purchases, track every transaction you make. This is when the truth hit me, Saylor says, his voice barely above a whisper. Bitcoin isn't just an investment. It's the only escape hatch from complete financial surveillance and control. It's freedom money. It's the exit from a system designed to enslave you through perpetual debasement. When the document appeared on his screen that morning, a Federal Reserve research paper titled Digital Dollar Design Choices, Saylor knew the timeline had accelerated. They weren't asking whether to implement the CBDC. They were asking how quickly they could roll it out. Wait a second. Don't miss this connection between all three truths. The dollar is dying, Bitcoin is a life raft, and the window for financial sovereignty is closing. Wall Street doesn't want you to know this because they profit from the current system, Saylor explains. Banks make money from inflation through fractional reserve lending. Financial institutions charge fees for moving your devaluing dollars around. The government funds itself through invisible taxation called money printing. Bitcoin threatens all of it. He shows me statistics that Wall Street analysts rarely discuss. Bitcoin's supply is absolutely fixed. Only 21 million will ever exist. Approximately 4 million are permanently lost. Another 10 million are held by long-term holders who will never sell. That leaves maybe 7 million available for 8 billion people to fight over. This is exactly where Saylor's strategy becomes most powerful. We're not just buying Bitcoin and holding it. He reveals we're using our corporate cash flow, our ability to raise capital, our entire business model to accumulate as much Bitcoin as possible before the rest of the world figures it out. MicroStrategy has purchased over 150,000 Bitcoin, making it the largest corporate holder in the world. But Saylor isn't stopping. The company continues to buy, using convertible debt offerings, excess cash flow, any capital source available. This isn't reckless, he insists. This is the most conservative strategy possible. Reckless is holding dollars while they print trillions. Reckless is trusting the same system that destroyed the dollar's value by 96% since 1971. But there was one moment when even Saylor questioned everything. It was March 2020, the pandemic crash. Bitcoin fell from $9,000 to $4,000 in days. MicroStrategy hadn't bought yet, but Saylor was deep into his research, modeling scenarios, preparing his board presentation. I watched Bitcoin cut in half, he recalls, the memory still vivid. And you know what I saw? I saw the dollar getting printed into oblivion. The Fed announced unlimited QE. The government sent checks to everyone. M2 money supply exploded by 40%. And I thought, if Bitcoin can survive this, if it can come back from this crash while the dollar is being destroyed, then it's the hardest asset in human history. Bitcoin recovered to $60,000 within a year. The dollar never recovered its purchasing power. You haven't seen the full scale of what Saylor envisions for Bitcoin's future. I believe Bitcoin will eventually absorb the monetary premium from every other store of value, he states, his conviction unshakable. Gold's $15 trillion market cap. Real estate's monetary premium, maybe $50 trillion. Art, collectibles, luxury goods held as stores of value, another few trillion. When people realize Bitcoin is superior to all of them, harder, more portable, more divisible, more verifiable, that value flows into Bitcoin. The mathematics are staggering. If Bitcoin absorbs even 10% of gold's market cap, that's $1.5 trillion flowing into an asset with a current market cap around $600 billion. The price implications are extraordinary. Saylor's models show Bitcoin potentially reaching $500,000 to $1 million per coin within this decade, not through speculation, but through rational value transfer from inferior stores of value. Everything so far points to one inescapable conclusion. The system is ending. We're living through the death of the dollar standard, Saylor explains, his voice carrying the weight of historical inevitability. Nixon ended gold backing in 1971. That was 53 years ago. The average lifespan of a fiat currency is 27 years. We're living on borrowed time, and everyone can feel it. The inflation, the wealth inequality, the political instability. These aren't bugs in the system. They're features. They're symptoms of a monetary system in terminal decline. He shows me the debt clock, $36 trillion and accelerating. Unfunded liabilities exceed $200 trillion. Interest payments are consuming 20% of federal revenue. The mathematics of default are unavoidable. The choice, Saylor insists, is simple but urgent. You can either adapt to the new monetary reality or get left behind. He says, his intensity building to crescendo. Every day you hold dollars, you're being silently robbed. Every month you wait to understand Bitcoin, you're falling further behind. Wall Street doesn't want you to know these three truths because they profit from your ignorance. He stands up, walking back to the window, the Federal Reserve building looming in the twilight. When he turns to face me, the determination in his eyes is absolute. I've spent 4 years positioning MicroStrategy for what's coming. I've studied monetary history, economic theory, game theory, network effects. And I'm telling you with complete certainty, Bitcoin is inevitable. The only question is whether you'll position yourself before or after everyone else figures it out. The phone rings again. Saylor answers without looking away from me. Execute the purchase, he says simply, then hangs up. That was another $100 million into Bitcoin, he explains. We buy every day the Treasury has excess cash. We never stop accumulating. Because I understand something that Wall Street is desperate to hide. The dollar is the bubble. Bitcoin is the pin. And when it pops, the wealth transfer will be the largest in human history. People keep asking him if it's too late to buy Bitcoin. But they're asking the wrong question. The real question is whether it's too late to preserve your wealth before the greatest monetary collapse in modern history destroys everything you've worked for. Everyone thought they understood Michael Saylor's Bitcoin strategy, but the real story was never about getting rich. It was about seeing through Wall Street's lies, understanding the three truths they fight to suppress, and positioning yourself on the right side of the greatest financial revolution in human history. The choice, as Saylor puts it, is mathematically simple. Financial sovereignty or financial slavery. Bitcoin or CBDCs. Freedom or control. But the window is closing. The system is ending, and the clock is ticking.